Good morning everyone, and welcome to the PivotBoss pre-market video for Monday, August 17th, 2020. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. You'll notice right here that the ES has traded in a very narrow range over the last 6 sessions, these sessions here. And if we look down, you'll see that right down this way is where the reading of that range is. So we've quantified it. You can see we had a decrease here, then an increase of volatility in range, then a decrease again, and here we are. Every time we kind of drop below that zone, we start to pop back up. We drop down, we pop up. So we're very likely to see another increase of volatility very soon. You can see based on a 6-day reading here, we have about 128.5 points of potential range that could be seen over the next 3 to 5 or 6 days. If this is a 6-day range, we could see a 6-day breakout. Sometimes it's a good 3-day breakout, sometimes it's a good 8-day move. We will see how it plays out. Overall, the trend is still up. If we were to get one good solid shakeout move here, a failed low, that could trigger a very big upside move. The other thing to keep in mind is we have 4-day highs that are all basically the same level here. Right around 33.82.5. If price were to break through that level and really get going to the upside, there's a major stop run day that could be ahead where we easily take out all-time highs there and rotate into 34.25, perhaps even beyond that level. So getting very close here to a potential breakout. The reading is very compressed here, and soon we will get a pretty solid move. Now, keep in mind, if we do see a major breakout through these highs, given this is all-time highs here, if there were any rejection, major significant rejection event at those highs, that could trigger a reversal back toward the 30 to 39 quarter FOMC key level. Remember, we're still moving away from this level. We thought we may have had a top here that could have got us going to the downside. But remember, the 33.60 level was important, and as soon as it failed to hold it the next day, that again suggested more upside until proven otherwise. But at some point we may see a significant rejection that could turn this thing around for a big retest back at the FOMC key level from July 29th. Alright, let's take a look now at the NQ. The NQ is also compressing here, not quite on a 6-day basis, but if we were to put it together over the last 2 days, 3 days right here, that would show a compression. Even though it's not fully developed here, you can see how compressed we are over the last 2 days, and now trading higher at the moment. You can see again, very compressed. Perhaps a 400-point move could be had, but even if we start to break out today, it could turn into again a stop run move up, where we're pushing through the 11,300 level and perhaps getting as high as that 11,700 over the course of several days. So if we take a look again at the FOM, or rather after rallying from the FOMC key level here, we haven't rejected to return back to it, so we're going to continue to go higher until we see a rejection. Once we see a rejection, then we likely come back to that FOMC key level. That's 10,615. But as of right now, the key range is still in play. There's your key range high right there. The upside break takes you to 11,723, and that's the level we've been talking about on, since the 10.7s right here. When we had the outside day here, I mentioned the 10.7 level could get you 11.7, which would be a plus 1,000 over the course of several weeks here, and that would be the 50% extension. The 100% extension to the upside would get you the 12,388 level. So at some point down the road, expecting that 12.4 to be hit. But right now, as long as price remains above 10.8, we still have further upside price action toward that level. A failure to hold this zone, say we have a major rejection here and we break down, that could be tremendous for a wider pullback. At this moment, everything still remains pushing higher within this uptrend until proven otherwise, and we now have another compression here on a short-term basis that could fuel the next breakout move. So we'll continue to watch this here. Again, as long as 10,800 remains intact, this market remains higher and a failure to hold that zone could turn things around on a near-term basis. Okay, let's take a look here at crude oil now. Now for crude oil, we've seen a bit of a pullback here over the course of the last several days. We had a high that came into play right there, and then a lower high, lower high, lower high, and so far today here, another lower high developing. Each day has had a lower low over the last couple of days, and we continue to see price fail to find acceptance above the 42.50 level. This is 42.47. That's the previous month's high. We've talked about 42.50 to 43 has been a tough area of resistance for this market here, and again you can see resistance coming in. The other thing that you'll likely notice is that ever since price hit the 200-day moving average, it has had a failure to really find acceptance above it, being resistance each of the last 5 days, and especially being today's high so far. So that is indicative of potential weakness to come, especially if price continues to fail to hold above 42s. If we close below 42 today for the day, that can open up at least a move to 41 and perhaps even a bit lower. We have this key range high, key range low with a midpoint at 41.12. That could be ahead for a test, but if we can't hold 41s, it opens up a drive into 38.72. That's the previous low here for the key range, and then you have the previous month's low here just below that at 38.54. There could be a pretty significant test and rejection of this zone that could bring you back up. So right now we're seeing quite a bit of compression here. We're seeing weakness come in off the 200-day, and if you look down here on a 6-day, actually there's a 3-day right here. If you look at a 6-day, let's bring this up. It's compressed on the 3-day, but even on the 6-day it's compressed as well. You can see this here, and at the moment trading 52% of average range. The potential over the next 3 to 5 or 6 days could be about a 4-handle move. So again, if we start to break down through 41.50 minus 4 handles, that could take us down as deep as 37.50, and at which case we could see a trap and reversal back up. So right now it's building the energy for a move here, and we will continue to see how this develops here heading into the rest of the week. Alright, let's take a look now at gold futures. This one right here is showing again the high likelihood of reaching that 1981.70 midpoint. We had the very significant sell-off that occurred here off of the previous high. That's the 2089.20. Price sold off significantly and pulled back as deep as the 1874.20s. And once we got a strong low that day and started to bounce, I mentioned 1981.70 is the high probability likelihood to reach that target there and cement this key range. Once we have this key range, we now have our levels in play, and we're likely going to remain bullish as long as this lower LVN remains intact. So talking 1825 to 1850 is a key LVN. We now have a strong low at 1874. We got to hit that 1981.70 to cement this key range, but once we do, there's a potential to come down here, reject this zone, and still come back higher down the road. And we also have our targets set out down the road as well, as high as 2300 for the next move. So we could see this thing build out within the key range, build some energy in the zone, develop that LVN, and then burst higher into 2300. So there could be a trap anywhere between 1800 and 1850 down the road for a shot at moving this thing to 2300. So that's the idea here as this thing continues to build out. On a short-term basis, we are building out a little bit of a range here over the last 3 sessions. You can see if we were to drop this down to 3, although it's a developing 3-day range, so it's not quite in play. Today could end up being huge, but this 3-day range at the moment is narrow. We've had quite a bit of action here lately. It's not uncommon to see a little bit of development and build out, but the goal is to get that move into 1981.70, and then from there we may see further compression and build out within this key range that'll give us the next energy to make that move to 300. All right, that is it for now. We'll see how this plays out heading into the rest of the session and the week ahead. Good luck, trade well, and I'll see you in the trading room. Take care.